Well, hi everyone, and welcome to the Buffett and Beyond Weekly ETF video letter. And this is Saturday, May 27, 2023. And these methodologies are based on the book Buffett and Beyond, second edition. And remember, folks, if you want more information, just go to our site, buffettandbeyond.com. And remember, Buffett is spelled with two F's and two T's, so all one word, buffettandbeyond.com. And remember, folks, if you want to live on this beach like Jimmy Buffett, you've got to learn how to invest even better than Warren Buffett. And this week, oh my gosh, the semiconductor, this is the XSD, which is the Semiconductor ETF, and look at this move. Wow, it is just rocking and rolling. And we have an intermediate term signal down here, which has given us a buy about two and a half weeks ago, when this bottom was forming in here, and when it broke through the 200-day moving average, along with this indicator turning up, it was a go all the way. And folks, look at this. This is Friday, and it's up another 6%. Now, remember what our whole premise is. We don't want to buy the ETF. We want to buy the best stocks in the ETF because we can outperform any ETF or almost any ETF. I have to put that disclaimer in there. But we can outperform almost any ETF by picking the best stocks in that ETF. Remember, the ETF is made up of stocks in that industry. Some of them are above average stocks. Some of them are below average stocks. Why in the world would you select the below average stocks? Good question, folks. And this is what we do with Buffett and Beyond. We pick the best stocks in any index or ETF, and we have them. Let's see the results. Well, last week, the top five stocks, and here they are, the top five stocks are up about, 43%. Look at this now. They're up 68%. So let's break this down a little bit. The XXD, which is the Semiconductor ETF, is up 25% year to date. The S&P 500 is now up 9.4% year to date. However, if you pick the top five stocks, which we picked, and this is a real portfolio, if you pick the top five stocks that we picked, and instead of the XSD, the Semiconductor ETF, you would be up 68%, almost 3 times the ETF. And what is this? Almost 8 or 9 times more than the S&P 500. Folks, and that's how this works. And it works with all indices. It works with all ETFs, and we have research on it. I have a lot of interns working for me to do that research. So yeah, it's all here. Now, somebody made a bet with me that, remember Kathy Wood and her ARK funds, the ARK, and the ARKK, which is her innovation ETF. And we tracked that for the past 2.5 years. So we're right here. So the top five stocks in our semiconductor ETF are up 74% on a compounded basis. The XSD, which is the semiconductor ETF, is up 22%. So we're looking at the top five are outperforming by more than 3 times the XSD. Let's go to the SPX, which is the S&P 500, and it is up 12% over the past 2.5 years. Now, the ARK Innovation ETF is down 69% over the past 2.5 years. So let's look at last year, 2022, which was a very difficult year. The XSD was down 31%. Our top five stocks were down 40.9%. So you can see when you want a portfolio that's performing like our top five in the semiconductor ETF, you have got to take a risk. And, it's always risk versus reward. And don't forget, I was a professor at one time, so I taught all these models, and we did a lot of work on risk and reward because I taught investing, advanced finance, international finance, when I was teaching, getting my doctoral degree for this work. This is my whole dissertation right here. Well, not the whole dissertation. So when we go down to 2021, we see that our top 5 stocks were up 73%. The XSD, which is a semiconductor ETF, was up about, well, a little more than half that, at 42%. But the ARK Innovation Fund was down 24%. So let's go from 2021 on up. And here we go. ARK was down 24%. XSD was up 42%, top 5 stocks up 73%. Then last year, 2022, tough year, the S&P was down about 19, almost 20%, 19.6%. But look at the XSD, really got hurt. The ARK fund just did terrible, almost went into non-existence here. And our top 5 are down 40%. But look how they are coming back. So the top 5 over the past 2.5 years, so including all these years, right up until this past Friday, up 74%. XSD, which is a semiconductor ETF, up 22%. ARK down 69%, and the S&P over the past 2.5 years up 12.0%. So that's how this works, folks. You want to be able to pick out the best stocks in any index or ETF, and that's what our computer program does on our website. But of course, that's a subscription rate. But take a look at it. You can sign up for the 2-week free subscription. Go to buffettandbeyond.com and sign up for the 2-week free subscription, and you can get a lot of this information, folks. All right, let's look at the technology ETF, the XLK. It is just rocking and rolling too. It is being pulled up. It's up 2.6%. This was Friday, now that I'm recording this, the end of the day Friday, and it's above the 50-day moving average right here, above the 200-day moving average down here, and the intermediate term indicator is pointing up. So the XLK, I guess we'll go over that next week with the top 5 stocks in that. You'll want to see those top 5 stocks, folks. These are fantastic portfolios, and if the economy is going to grow, these stocks are going to grow 2, 3, 4 times faster than the economy as a whole. Now, let's go to the retail ETF. That's the XRT. And folks, we are talking about some of our favorite stocks, and they are getting hammered. The retail is slowing down. And I heard a good explanation today, because it says, look, everybody is buying the services. They're going on plane trips, they're renting cars, they're going out, they're on vacation, summer's coming, they're traveling, they're spending money on the services, they're not spending money on the goods, goods and services. So this is why the XRT is falling like this, and of course our intermediate term indicator has turned down once again. So this is not a good sign for those retail stocks, and let's look at some of them. Now, this is year to date. Black line is the S&P 500, and you can see that as of Friday, the only stock that's above the S&P year to date, now the S&P is the black line, the only stock above it is Costco right here. So you can see that all these other stocks, and we're looking at look over here, we're looking at Five Below, we're looking at Ross, we're looking at Best Buy, TJ Maxx, we're looking at Dick's, we're looking at Costco, and we're looking at BJ's. These are all good stocks. How do I know they're good stocks? Let's go back over the past 5 years. And folks, look at this. The only stock that is underperforming the S&P is Best Buy right here. And this other stock, which is Ross Stores down here, underperforming also. So we have to rethink some of the stocks that we have in our portfolio, our defensive portfolio, because why would you ever invest in a stock that's underperforming the S&P 500 over the long term? Remember, 96% of professional money managers cannot outperform this black line, which is the S&P 500, over any 10-year period. And that's a Morningstar research report from 2002. And folks, it is true today. So look at the best performing stock up here is Dick's Sporting Goods. And boy, oh boy, it's up 300% with the market up, right around 50% right in here. So Dick's Sporting Goods up here, and then we have BJ's, followed by Five Below, followed by Costco. So those are our favorite stocks, actually, in this sector. And over 5 years, they are all outperforming. But Year to date, let's go back to this slide again. Year to date, they are underperforming the S&P 500. Not that they're losing a lot of money by any means. They're just underperforming the S&P 500. So, folks, you learned a lot in this short time period about picking the best stocks in the ETFs. We have a computer program that does that for you. So, folks, you don't have to worry about it. You can just pick those stocks the same way I do, and you can use a computer program. Go to BuffettandBeyond.com, sign up for the 2-week free subscription, and, folks, you'll see what we're all about. Again, BuffettandBeyond.com, and we have a 3-day weekend coming up. Go to the beach, walk on the golf course, walk down the street, be with your family, be with your loved ones. Do nothing for 3 days, folks. Guess what? We'll be back here on Tuesday, and so will the market. All right, folks, have a great weekend. We'll see you later.